Good afternoon and welcome to Bull Market Stock Show. This is your host, Rian Hobson, and we're doing the South African Reserve Bank today, which is a very crucial decision that they need to take tomorrow. But I need to apologize just to start a bit later. We just had some technical issues. The weather is quite a bit chilly in the Western Cape. But today we will look at the Reserve Bank, which needs to make their decision tomorrow, and also today's inflation numbers that came out, which was a bit okay, much better than the 5.2% what we saw last month. But it is actually quite a difficult decision for the governor tomorrow. The big question is, will he start to move the interest rates up, or will he keep on hold for much longer? On the other side, the bulls are back in full control in the Eurozone. As I could see, the FTSE was up with a 1.6%. The DAX is up by a 0.8%. The French CAC is up by a 1.3%, which is actually very good. I was looking earlier at the oil stocks. Crude oil were up by 1.4% now. Brent is up by 1.63%. Gold on the other side was a bit struggling at 1800. I see it's still there. Is it 1802? But as the other commodities are going up, I do expect gold to go maybe up later. Silver is up by a 0.83%, and then platinum is up by a 0.6%. So possibly the gold can turn its fortunes around and actually move up. That we will see obviously later in the day. But the whole topic of the day is actually for South Africa. And this is now coming from the inflation rate that was released earlier. The inflation numbers is as follows. It was actually at 4.9%. There was forecast of a 4.7%. It's better than last month. Last month it was at 5.2%. But the main thing is the month-over-month statistics for South Africa with the inflation number. The inflation month-over-month is up by a 0.2%. Core inflation, it's a bit stable. It's at 3.2% versus the 3.1%. So that is actually okay, but it's still to the upper end of the inflation mandate of the Reserve Bank. The Reserve Bank would like to have it at 4.5%, but the inflation mandate of the Reserve Bank is between 3 and 6%. That is where inflation needs to be. But there's things that comes in with when it comes to South Africa. One, the Reserve Bank did warn on the last policy meeting that he might lift up the interest rates in the second quarter and in the fourth quarter of 2021. So please, he did warn us before. And on the other side, he did warn about the slow progress of the vaccinations. On the other side, the policy uncertainties with the land expropriation, and then we have the lockdowns when it's hot and when it's cold. Then we have lockdown 4, and then we have level 2. So that policy uncertainty also plays a role on the policy decisions. Now, all of those factors come into play for the governor tomorrow, and that is actually a very tough decision. So the other thing that I picked up is actually to do with the South African businesses and also with the consumers of South Africa. The thing is, for me personally, the South African consumer is still okay, I must say. I can say that the savings rates are up, so it's actually better than last year. It's actually last seen the saving rate, I think, in 2007, 2005. That was the last time we saw actually a good savings rate in South Africa. So the saving rate is okay. Low interest rates also help. But there's one thing that comes in with South Africa, that is actually now that the household income to death, that is actually a bit of a problem currently. I'm not saying a huge problem, but it is slightly up. I will just show you actually a chart that I try actually to bring up for you. That was now more recorded, I can say, in 2007, in 2000, last year, 2009, to 2019, 2020, that is where we start to see actually a rise in the household debt in South Africa, and that might actually be a bit of a scare for the governor tomorrow. Because look, interest rates was low, people were starting to buy houses and cars, vehicle sales were up, and then the debt started to balloon actually when it came last year. And if I just show you this, just want to make the screen bigger, share. Right. So there we have the story of South Africa. This is now the private sector debt, and this is now household debt. Now, household debt is in the dotted line there. And then we have the private sector debt that is actually being low. Now, the thing is, the bulk of the debt that was accumulated by South Africa is definitely not in businesses. That is our private businesses, because this is actually at a record low currently here. Is actually below zero. So which means businesses are not taking up debt. That has all have to do, obviously, with the policy uncertainty with South Africa. And obviously, we are not sure about the lockdown levels and all of those things that came in. And businesses are not doing well in South Africa as well. So I will actually come to you with the liquidation process in South Africa, which is actually quite bad in South Africa. Quite a lot of companies are going under. Now, definitely the debt is not basically with businesses, but with the consumer. Now, the debt currently in South Africa, or I would say debt to income in South Africa, is sitting at about 77%. So which means 77% of South Africans' income goes to debt. Now, that has been increased quite steadily since last year. It's been moving up quite aggressively. Now, if interest rates do increase in South Africa, this might become a bit of a problem. Now, this was done in the beginning of the year, so obviously this number could maybe be higher, or it could be lower, but I think it can definitely go higher due to the spike in housing and people do renovations and all of those things. So this could be a bit higher due to actually the low interest rates. Now, on the business side, that is not the case in South Africa. Businesses are literally unsure of what is going on in South Africa. Just to give you another picture here, I just want to make this bigger. Just one moment. This is also, if you look at it, it's the same picture. Apology for that. Now, this is the liquidation in South Africa. Now, the liquidation in South Africa is actually quite heavy. It's actually up by 66% just for this year. And this is quite a large number. This is the highest number ever. It was not even so high during the recession in 2008. Now, if you look at the liquidations, which the areas that were heavy hit is your trade, catering and accommodation. Now, this is now January to March 2021. It's about 865 businesses that basically closed. The other one that was hit hard is your finance, insurance, real estate, business services at 278. Now, as the year progressed in May, it dropped a bit to 195, April 158, and in May it was actually at 191. And this also add up to actually a lot of job losses in South Africa. So it is actually a heavy story for South Africa, because this leads to job losses, and also that's why businesses are not actually taking up debt to start the businesses due to this policy uncertainty. So it is literally for South Africa, there's two things that drive South Africa currently now. Major drivers is the consumer spending, and then on top of that, it is also our commodities that's doing the job for South Africa currently. Now, what will be now the effects if he raise up if the governor do raise the interest rates tomorrow? It could be a bit heavy on households, but the household actually in South Africa did have some savings, or some of the households did get some savings done during this period where they could save a bit of money. On the other side, obviously, if he ramp up the interest rates quite aggressively, that will put up enormous amount of stress on South African households. So, honestly speaking, I don't think he will move tomorrow. I think what's gonna happen he's going to be hawkish and warn us more and say that he will lift up the interest rates, but I don't think he will do it basically tomorrow because of inflation that is still a bit low, and obviously the policy uncertainty that also create, but that could be the possibility that inflation is a bit lower. Now, on the other side, on the rand, I think personally the rand will strengthen a bit in the short term, maybe for a month, few months or so, but honestly speaking, there's nothing else that can keep the rand stable enough to hold it actually at about the 14 level. So in the short term, I think the rand will strengthen, but on the other side, I don't see anything else that can keep the rand. If jobs is not created, private businesses are not taking up debt to expand businesses or do something or start businesses or let the economy run, then I don't see anything good for South Africa with all this uncertainty that is happening in South Africa. So that is my projection for tomorrow. I think the governor will hold the interest rates at record levels, record low levels, and then maybe make a move later on as more data come into play. But as things stand, he will hold. I think the rand may strengthen because he will sound hawkish tomorrow. I think the rand will strengthen for the short period, maybe for tomorrow and a few months on, due to commodity prices that going on and the Federal Reserve that is a bit dovish. So I think that will play maybe in the rand's favor, and hopefully everything is stable in South Africa. But further on next year for the rand, I don't think that will help because, I don't know, businesses are not spending, businesses are not taking extra credit, so I don't see anywhere where the rand can go. So that is it from my side for today. Please don't forget to subscribe for my YouTube page, and as I said, always leave your comments so that I can answer them on the live show. That's it from my side. All the best with trading for today, and I think the bulls are out on the market today. Bye-bye.